Please welcome our panelists for Off the Beaten Path. Is alternative funding the route for you? Joan Broughton, Senior Vice President and Lending Team Member, Craft 3. Roland Chaitin, Vice President and Senior Loan Officer, Community Capital Development. Corey Ross, President, Fusion Business Finance. Stephen Scheinbaum, President and CEO, Merchant Cash and Capital. Michael Banfield, Founder, Springstar. Makini Howell, Founder, Plum Bistro. And your moderator, Tina Vlasaty, Director of Finance and Operations, City of Seattle Office of Economic Development.
My name is Makini Howell. I am the owner and I'm the executive chef of Plum Bistro. And Plum itself encompasses a bistro, cafe, Plum in the Seattle Center, and a food truck. And I also have a cookbook. When you get the idea to find a loan that you want to fund your business, then you just have to start looking. But I went to Wamu and I ran into a woman who she just really liked my cafe. She liked the idea. She was just like, I really think that you can do this, but I can't get you a bank loan. But you can go to this place called Community Capital Development. They specialize in lending to women, businesses of color, businesses that better the community, like all of the boxes I could check. So I was like, well, I'll at least check it out, you know, and see if they can offer me anything that the banks haven't, because the banks offered me nothing. The thing about Community Capital is they helped me every step of the way. They had fantastic counselors, they had fantastic lenders, they have a fantastic support system. The loan really was the catalyst for, like, it was everything that I needed to really build the idea, the brand of a vegan place, because it's a little bit larger than a restaurant. It's a vegan brand that I was after. The funding definitely set me up to grow, though, because I started with the cafe and then I've grown into the Seattle Center, which we're expanding, and the food truck, and I'm working on a line of dips, and so it just gave me just the encouragement, just enough money, just enough, because it wasn't even a whole lot, but just enough to get started.
My name is Michael Banfield. I'm the president of Springstar. We started Springstar in about 1998. It's part of our ongoing effort to change the way people use pesticides by giving them useful, effective alternatives to the traditional poisons that they end up having to use in their home. About 6 years ago, we'd made the strategic decision that we wanted to make our own products in-house. We went to a traditional bank, we got a loan to buy equipment, and we had a specific strategic plan. Buy the equipment, learn how to manufacture the equipment, use the equipment in our building so we could manufacture high-quality goods using techniques that no one else could, and we wanted to make it for less than we could buy those goods overseas. As we reached the point where things were starting to take off, our bank had decided not to renew our line of credit. They'd initially offered us one method of combining all our loans into a larger SBA-backed loan, but then they just pulled credit completely. We met Walter from Craft 3 at a Washington Exports Council meeting, and we heard their pitch, which was that they're a community lender. They want to help local manufacturing, grow jobs in the state of Washington, and preferably that the company has a triple bottom line, helping people, helping the environment, and creating profits. That was us. And so we increased our sales overseas, and we actually supply one of the largest pest control company, retail pest control companies in Australia. So we have our products at every major store in Australia. We're on track for a 70% increase just based on early orders that we have in hand right now. One of the key products that we've licensed was from the U.S. military for a mosquito trap. It works against the mosquitoes that transmit dengue and reduces pesticide 99% while being the most effective system out there. So that product is scheduled for a launch in Walmart this spring.
Well, you guys are in for a treat because we have some amazing stories here, a couple of really great business owners who can really talk about two very different business owners with different experiences. and then lenders who can help you all think about what the best kind of approach to capital might be for you. To help us be able to think about how we can address some questions that will be useful to you, can I do, as far as we can see, a show of hands of people who have kind of just an idea for a business, haven't started their business yet? So, okay, a smattering of those. What about people who've been in business for a year or less? For 2 years to 1 year? And what about more than 2 years? Okay, so pretty good mix, great. All right, well, I wanted to, Mike, since you were the most recent to speak, why don't we just start with you? Can you talk a little bit about what was it that made, you're a customer of Craft 3, that made Craft 3 a good fit for you? And maybe if you can talk just a little bit about the process of getting a loan from them and transitioning from your bank relationship to them.
Well, Craft 3 was a good fit because of their community involvement. While they looked for collateralization, they also looked beyond that to us creating jobs in the community. Since we signed up with Craft 3, we've added about double the size of the company, so we have 36 people now with manufacturing in Woodinville. They also looked at us personally as the guarantors of the loan, and so that combination for us became important.
And McKinney, I'd love to hear from you. You've grown your business from 1 location to 3, 4. And can you talk a little bit about how has it been to work with community capital development in terms of, why was that the best fit for you, and how have they been able to help you grow your business after you started it?
Well, they were amazing. The reason that I really liked them was because there were a lot of older people on their team that understood the business. They were really good counselors. They were patient. Their focus was on women and people of color and businesses bettering the community. And sometimes when you go to a bank, you don't really understand what it is. If you're applying for a loan, you don't understand your balance sheet, you don't understand your profit and loss, and you need a lot of assistance, and they don't always have the time. So when I went to Community Capital, their counselors took the time to walk you through understanding what your proposed business is going to look like, what your current business looks like, and how to understand the financial end of it. And even before they allow you to apply for the loan. And then you go over to the loan side once you've been approved by their counselors, but they counsel you every step of the way, and I think that the experience of the people at Community Capital is really helpful because they're old enough to understand the industry and they're old enough to navigate you through what you should do and what you shouldn't do. So my experience with them, I stumbled and I had to go back and get a second loan because when I started the business, it grew at such a rate I couldn't quite control it, and I didn't really understand what I was getting into because my background is in fashion design, not finance, which I should have gone to school for that, but I didn't. So I had to go back and I had to get a second loan. And they approved it, but before they approved it, they walked me through how to actually use the funds to retain employees. And so they didn't make you feel like you didn't do it right because you had to come back. They were encouraging, they approved the second loan, I was able to retain employees. And from there, I was really able to kind of hit the ground running and grow the business. So I did go from 1 location to 3 brick and mortars and a food truck. And then I have a commercial kitchen. And I was able to retain enough employees to have them work so I could spend 2 years. It took me almost 2 years to write the cookbook. So all of those things kind of work together. And just the support of Community Capital really helped to do that.
So one thing, Joan, that McKinney brought up is the idea of preparation and how how much she had to do to get ready for putting together her loan. Can you talk a little bit about what kinds of documents or what do people need to be prepared with when they come to talk to you and are asking for a loan?
Well, everyone is a little bit different, and we treat everyone differently, too. There are stories behind everyone's approach to us. And we need to know that they understand their business, their industry, their market, their planning needs to be realistic. We need to stress test that planning. We need to work with them in that stress testing procedure. But a plan that they have created themselves, and they know all the answers to all of our questions is a really important piece. It's not a real good idea to have someone else prepare your business plan. You really, really have to own it, because it's not just for us, the lenders, it's for you. And those projections, you don't just do them and then put them aside. The earlier panel said it never turns out quite the way you project, but, or even near in many cases. But if you do a variance report every month where you see your progress against those projections, then the next year when you do your projections for yourself, you're going to do a much better job. It's not about preparing everything that you need to know so that you can borrow money to do your business. It's about understanding your market, understanding your numbers, and being successful because you understand them and you can monitor them and go from there. So it's really important at the application phase for us to get a strong feeling that not only is the business plan solid, but the people have what it takes to pull it off.
Great. Roland, one thing, going back to McKinney's comments about community capital development, is that community capital development provided some additional support and counseling. Can you talk about what your organization does beyond lending in terms of supporting businesses?
Okay, so we have technical assistants at Community Capital, which are counselors. They're part of the Women's Business Center, but it's both for women and men. And they meet with the clients and go through all aspects of the business. They review everything from the original business plan to marketing to finance to employment, all aspects. And they usually do about 4 hours of free counseling for everyone at the front end, and then there's additional counseling that can go on after that. Some people are prepared to go right into counseling, but other people need to do even more preliminary work, and so we have classes that we offer, including a business planning class. I believe it's 5 or 6 sessions, 3 or 4 hours per session, and people can enroll in that class and go through and really learn about what it takes to put together a business plan and learn all aspects of doing that. We've found some statistics over time that about 60% of the people that have taken entrepreneurial training classes like the ones that we offer go on to run their business for at least 5 years or longer, compared to some national averages that you see where the fallout rates are much greater, with people leaving business somewhere in the first 2 years, 80 to 90%. And you see all different types of statistics out there, but having that great of a retention for people who have actually taken the business planning class really speaks for the importance of taking some type of entrepreneurial training. So we offer that. We do offer the one-on-one counseling, which is real important, and people can step through and really learn what they have to do for all aspects of their business, and particularly the financials. They can sit there side by side with someone and go through a cash flow, a profit and loss, a balance sheet. But we also have this capacity now statewide, because we do it remotely through the computer. So we can work with clients anywhere in the state with remote access. So even if you don't have it at home, you can go to a library and get connected to us.
I wanted to ask you, because when we were talking earlier, you talked about how the products of your company, at least the primary product, isn't really considered a debt product. Can you talk a little bit about why someone would come to you and what you offer that's different than some other lenders?
Sure. We're truly an alternative finance source, and we don't require any collateral. We are strictly a cash flow type of lender, and we're really just looking in the rearview mirror and trying to predict what's going to happen coming down the road. We don't take any collateral, and instead what we do is we give a merchant $50,000, and maybe we buy $60,000 of future revenues, if and when those revenues materialize. So we'll generally take a fixed percentage of someone's future credit card sales or bank deposits or revenues, whatever we agree upon, and we take that same percentage whether their sales go up or down. So what that does is it affords someone the ability, when times are good, they can pay back more. If there's seasonality or cyclicality, then they pay back less. And it's a non-recourse product, no personal guarantees, no one's leaning anyone's homes or anything like that, just in the instance of a fraud or misrepresentation, which really happens in a very, very minute portion of the time.
Great. And Corey, can you talk a little bit about why would someone come to your company for capital, and what exactly do you offer?
Absolutely. We offer accounts receivable finance to small and medium-sized businesses. In a good economy, like the one we're on the verge of now, we see a lot of startups. There's no limit to time in business. We'll literally finance the first sale your company ever makes. And then as companies have struggled through the recessions, what have you, we were a safe harbor for them when the banks weren't able to provide the capital that they want. We also have some flexibility that you probably share, where we can usually fund deals within 48 hours of the time of the request, so we're really quick to act. And we're able to do that through software technology that we've developed, where we can analyze a company in literally less than a minute.
Great.
Yeah.
And I wanted to give Joan, you and Roland a quick chance to, if you can talk about each of you, what would be your ideal profile of company that you would want to lend to? Maybe Joan, you want to go first?
Well, we lend to so many different kinds of companies. It's hard to cite a typical. But generally, our customers have been declined by banks. They are early startup or projections based. In other words, their historic cash flow doesn't support the debt that we're going to create for them, but their projections do, and we feel that they're well grounded and presented realistically, and that they have all the assumptions are in line to get them where they need to go. We also lend money to the formerly banked, and we will take a business that has been around for a while but had a couple of really bad years, or they ended up in the lost share portfolio of a bank that failed, and the bank that took over wants them to leave, or they're in the supervised asset department of a bank. But they are turning the ship, and we can see that they're going to be successful. And we take our time to develop that level of confidence in that kind of a customer, that they are going to proceed and go forward successfully and be able to pay us back. So there is that broad range. But for the most part, our goal is to graduate our customers back to the banking environment, where they can borrow at lower interest rates and have the full relationship. But we're there during the times when they're not bankable, or they were bankable and will become bankable again, but we can handle them in the interim.
That was an excellent answer, because we share a lot of things in common. One of the differences is that the level of capital that we can provide only goes up to a certain point, roughly $250,000, and at that point we start partnering with other lending institutions, and Craft 3 is able to go to a higher level of capital. We do work with about 40%, I would say roughly, of startup businesses. We do also work with all the other types of businesses that Joan was just discussing. We do a lot with the businesses that are right on the edge of being bankable but just can't quite get there yet. And we do work a lot with the businesses that have projections that show where they're going, but they're just not quite there. And we do a lot of technical assistance and counseling to make sure that they can hit these projections and keep it going and get to that point where they do become bankable. Sometimes this is a long process. Sometimes it can take several years, but we try and stay with the businesses and follow them and give them the additional support they need. Also, we've got the type of flexibility that we can step in and do a change in terms with our borrowers should things not be working out quite the way they had anticipated, so we can alter some things as we're going down the road, as well as provide additional capital sometimes if things start taking off and they need to move quickly and add in additional finance, or perhaps to facilitate a new location or new product line, something like that, even before they're, again, bankable in the mainstream. So we're able to bring on additional products. We also do some SBA 7A guaranteed lending, so we can bring in those components as well, and that provides additional flexibility so that we can meet some additional needs of the clients. We're trying to be as many things to as many people as possible, but obviously there are certain limits, but we do the best we can, and being very heavy with the hands-on one-on-one is a very strong component for community capital.
Great. Thank you so much.